Hello everyone. Today I'm going to share with you some simple rules about risk management. So we are going to look at how to calculate the risk for each trade properly. I'm going to show you my simple trading rules and how we can calculate the risk. So when it comes to trading, two common questions before opening a trade are: how much money do I need to risk for each open trade, and how big should be my lot size? So these questions are very essential, but we need to know how to calculate them in advance before we initiate the trade. So as beginning, we need to know that trading Forex and other leveraged products, they carry a high level of risk. So this is how we need to be prepared for the risk that we are going to face and to have it calculated in advance all the time. Many traders believe that trading is the same thing as gambling, but they are completely different. The difference is because a trader knows in advance the risk that is involved on each trade, but on the other side the gambler doesn't know it. So this is the big difference. So we need to calculate the risk all the time. So another question is that how big the risk should be. It depends also from the type of trader's approach. So we have risky traders and we have also conservative traders. Most of the time in Forex trading, an aggressive approach is used more than 5% of the entire account for each trade, so it is risk more than 5%. But on the other trade, conservative traders, most of the time it is used from 1 up to 2% for each trade of the account balance. So this is the maximum risk that is used for each open trade. So it's very simple overall how we can calculate the risk for each open trade. So let's say that we are going to have an account with 10,000 account balance, and we are going to open a risk for each trade with 1%. So it means that by risking 1% for each open trade, we can risk up to 100 positions by trading all the time. So we are not going to have that bad luck that we are going to lose the 100 positions at the same time. So this will give us 100 different possibilities that we can win and lose at the same time. So this is something that is very good if we manage our trade, our risk for each trade, and it gives us time to recover step by step, because also the market conditions are not the same from 1 week to another week or from 1 month to another month. So this is important because also the performance from 1 month to another month is different from time to time. So this is what we can face in different moments. So let's go on to look at also on the other charts on the chart, and we are going to look at how we can calculate the risk right now on a real-time environment. So let's say that this will come in relation to the risk and to the way that the trader is using in his strategy. So let's say that I'm going to use a reversal strategy. I'm a swing trader in my trading technique, and I'm going to sell. I have isolated this scenario here. So in the scenario that I'm looking at, the price is facing a potential triple top pattern, and what I have decided to do is that I want to sell when the price will break down of the neckline of this pattern. So this is my pattern here, and here we have 1, 2 and 3 tops, and after that we have the breakdown from the pattern. So this is my trading scenario. So now let's go and let's measure the risk. I'm going to sell it when the price will go up to 0.7005, and the stop loss will be at 0.7060. I'm going to take the measurement tool, and we can see it very clearly in this scenario. I'm going to make this bigger. Here we have the data. I'll place the same ones as I have placed on my chart, and we can see that in this scenario I'm risking only 55 points, 55 pips for this trade. What we are going to do now is that we have to go on the risk calculator. What I use most of the time is the myfxbook.com. You can find the Forex Calculator. I'll place this also on the comment section below. And you have to fill the data that are on the lower part of the risk calculator. So let's begin. The currency pair that I'm trading right now will be Aussie Chief. So this is Aussie Chief that I'm going to trade. For this trade, I have the account of my balance, the account currency is in US dollar. I'm assuming that I'm having a 10,000 account here, and the risk ratio, because it was filled on my side, the risk ratio here is the amount that I want to risk for each trade. So it means that as long as I have a $10,000 account, and if I'm going to risk 2%, I have to place 2% here, just the number 2. If you want to move it in money, just click the swap with money. We are going to look at also that example. So I'm going to leave it 2%, the risk that I'm going to use. The stop loss that it should be, I'm going on the next side. It was 55 pips. Let's go, let's make it 55. And the trade size, I'm going to leave it lots. One lot is 100,000 units. So we have to leave it 1, and after that I'm going to press the calculate button. You will see that at the moment price show it that money USD results. This is the amount that I'm going to risk. It will be $200. The units that I have to open right now, so this is the calculation. The unit is 35,166, and in lots this is approximately 0.35 lots. So this is your position, how you should open it on your account, 0.35. So after that you should move on your account, you should place your amount that you are going to sell, 0.35. You will place the stop loss at 0.7060 and the sell price 0.7005. So this is the best approach how you can calculate your risk. I'll make a brief presentation on the benefits of the WhiteBIT crypto exchange. WhiteBIT is one of the largest European cryptocurrency exchanges. What is really surprising about this broker is that they possess European exchange and custody licenses. WhiteBIT meets the KYC and AML requirements. That means that you will have reliable protection of assets and their securities. You can also make passive income from your money even if you don't intend to invest in certain time periods. Earn up to 30% of passive income on Bitcoin, Ethereum and USDT. These interest rates are impressive compared to other brokers. They have also low trade rates up to 0.1%. You can trade more than 450 trading pairs, and their referral program offers 40% revenue from referral trading commissions. If you want protected funds and earn more passive income, you can open an account via the referral link in the comment section below. Let's take also another example. Let's suppose that we are on this triangle pattern here. I will take several examples so you can be clear how it works out. I'm going to open the trade on the breakout. Let's suppose that I'm a breakout trader. This is my point here. I'm going to round this number to have it more easier for us. Let's say this is my entry point, and I'm going to use the stop loss below the previous low. So it will be at 80. Let's say this is my stop loss price here. what I'm going to do again, I'm going to make the difference between the stop loss price and the buy price. I'm going to place this calculation. You will see that from 80 to 68.20 it will be 40 pips stop loss. So I'm going to move again on my Forex calculator. This is only for the risk in this situation. I'm not calculating your profitability. If you are going to take your profits close to the top of the structure, or you are going to take it higher. So it is not our point to focus on that part. We are going to focus only on the risk calculation part. So our stop loss is 40 pips. Let's go on Aussie Chief again. It is selected. Our account is 2000, and this time I'm going to increase the risk on my trade. Let's suppose that this time I want to be an aggressive trader, and I'm going to risk 5% on my account. So keep it this risk percentage here. On this second example, I'm using a 40 pip stop loss. We are here 40 pip stop loss, and the lot size, let's press calculate, and you will see that with a 10,000 account the 5% is $500. So this is amount that we are going to risk for this trade. So if price will move not up, but it will move below our area, we are going to lose $500. In this example, we have to open 1.21 lots for our account. So this is the amount that we have to open on our real-time account. The stop loss should be 0.6780, and the entry price, the buy price, will be 0.6820. So it is very easy process. All the time you should do the same thing and never skip this process, because it will defend your entire account from the losses. So if you are not going to calculate the risk for each trade, you are going to lose your entire account on the future. So let's go on another example. This time I'm going to take an example from Euro USD. Let's suppose that I'm going to sell according to my strategy. So all the time everything is related with the actual strategy that we are using on your trading. I'm going to sell this pattern here, a bearish pattern. Let's go and let's create our plan right now. So we don't know that all of this part has happened here, so let's make it in this way. I'm going to make it in this way on the reply button. I want to sell on the pattern breakout, so this is my selling point, and the stop loss should be above the previous high. So this is how I'm building up this scenario. It doesn't matter the rest for this. So it's very simple. This is how I want to trade for this one. Let's round these numbers for our example. We need to be more clear for the calculations. So let's say this is our example at this situation, and now we are expecting the price to push lower after we sold it. So let's go, let's take the measurement tools again from top to bottom. 1.0590, this is our stop loss. Oh, sorry, 0.90 and 0.690. So in this situation, in this example, we are using a 100 pips stop loss. So this is our scenario. Let's go on the risk calculator tool, Euro USD. This is our scenario again. The account, let's say that I'm going to make it smaller. In this scenario, I'm going to have a $7,000 account. I'm going to use a 2.5% risk for this trade, and the stop loss for our trade is 100 points at this moment. And also the trade size is 1%, one lot. I'm going to press calculate again, and you will see that the risk amount that we are going to risk for this time, it is $175, and the unit that I should open, it is 70,500. But from the system, this is rounded up because it cannot be opened on the real-time account. So you should open 0.18 lots here. This is how you should do. So you should sell 0.18 euro USD lots. The selling price 1.0690 and the stop loss 1.0790. So if you are going to use all the risk management in this way, you will not have any other question about how much you should risk, how much should be your amount, because if you are going to have the risk in control all the time, this will help you a lot according to the size of the calculation, the size of the position that you have to open. So your position is calculated according to the amount that you are going to risk. You cannot open a fixed lot size all the time. This comes in line with the account balance. So let's say that our account balance is increased now from 7, we won $2,000. Our account was increased up to 9,000 now, and if I'm going to suppose that this is a new trade, you will see that the risk amount, it comes at 225, and now on this trade we are going to open 0.23 lots. So everything will increase with the increase in your amount of the balance, and the lot size will decrease if your account balance will decrease as well. What it doesn't change is only the risk ratio that you are using in this scenario. So let's suppose that you don't want to keep it in this way. You want to risk in fixed amount with dollars, let's say. You just can come here, you can swap with money. You have to make it as you can afford to lose. Let's say you want to lose $100 for each trade. You have to place $100. The amount at risk was 100 pips at this scenario. We have 100 pips and we have to press the calculate button. You will see that by changing the amount that you are risking, we can see now that in the screen appears the risk ratio. So you are risking 1.11% from your account balance. This is the risk that you are using, and the lot size that you should open is 0.1 lots for this trade. So it's very easy how you can calculate the risk percentage and how you can calculate the risk management for each trade that you open every time. So this is something very easy. So you should not trade in blind, just calculate in this way all the time, and it will be a very efficient way for your daily trading. So hope you enjoyed the risk management technique that I'm actually using, and hope it will be useful for all of you. See you on the next video. Bye bye.